Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I'm going to come with a new buy recommendation. Actually, I'm going from neutral back to bullish uh, on a commodity, namely copper. So let's get into it. So this is a long-term chart of copper. This goes all the way back, well, to 2001, but it's beginning in 2009. If you remember, that was the bottom of the '07 crash. Uh, we went through a, we've been going through a long, long period of consolidation in copper prices. It was, you know, what would that be? About 16 years in the making. So this is a ascending triangle. We got a flat resistance line and we got a rising support line. And so we have all the necessary touches, A, B, C, D, E. So we've had two attempts at breaking out. It hasn't happened. Prices each time have been pushed back. And the reason why this matters so much is number one, it's such a gigantic pattern that the move will be swift and will go far. If you measure the base of this triangle and you project that distance upward, you get an $8 price projection. Okay, so we have a smaller triangle within this large ascending triangle, and that price projection is 590. We've gotten 535, but we haven't gotten there yet. So we're going to take a closer look at this part, and we're going to turn our attention to the copper ETF, the exchange traded fund that you can buy on the open market. You don't have to trade copper futures. And the symbol is CPER. And so here we are. We got a mess of a triangle. Back in early 2024, because we were near our support line of the triangle, I was looking at this inverse head and shoulders pattern. Left shoulder, this is a bullish pattern. Left shoulder, head, right shoulder, neckline. When it broke out, I went bullish, I don't know, at 25, let's say, and it proceeded to go straight up to our price projection of 31 and a half. Pretty, pretty uh, it's pretty crazy the way it got really right to the price projection of the inverse head and shoulders triangle, whatever consolidation. You had both of those here actually. So I went neutral. And then a little bit, a few weeks later, this is a weekly chart. Each one of these bars represents a week. I went back to a buy rating. Then I got stopped out with a loss, small loss. And then things bounced around above and below these moving averages. And I went bullish again in September, started well. Then it came down. Oops. Then it came down, and then I figured out this is another triangle within this larger triangle. So we had A, B, C, D, E, had all the touches. So I left it on as long as it helps support here. And we got up to, I don't know, 29 and a half, let's call it, and went neutral again because we were getting up near resistance. And then we broke out of the big pattern that I want to be part of. And so, like most market technicians, they buy breakouts. I try to do things on pullbacks, but I did buy this. And of course, what did it do? Went higher for a week or two, and then it plummeted. And it stopped me out of my prior low, and I took a loss. And so now I'm going bullish again today, slightly higher. But overall, it's still been a good trade. It's been dicey. Copper, very volatile, along with silver, natural gas. some of the cryptocurrencies, and sometimes you have to get in more than once. And so I'm going back to bullish here, and we're going to take a shorter look at this so I can show you why I'm doing it today. I'm going to put my stop at 28, and here's why. So on this recent downturn to the low, we had an advance. I'm going to reference the Elliott wave theory. I don't want to get too technical or too long here, but the Elliott wave theory believes that trends or cycles go in waves of five, with one, three, and five in the direction of the bigger trend, and two and four are counter trend reactions. So I see one, two, three, four, five up. And now I see a three wave down as long as it holds this low. And now I see it bouncing around and it looks like we're forming a small triangle. Right now, prices are hitting their head on a confluence of moving averages, along with the resistance line of this possible triangle. A, B, C, D probably needs another touch. But what we had today was a bullish engulfing pattern. Now, this is just a daily chart. This isn't a weekly or monthly bullish engulfing pattern, but it is what it is. And so I believe that the reward is like really, really substantial, as I showed you in those longer term charts. And my risk at this point is pretty small at 28. What is it, 6% maybe potential downside. And if I wait until prices are trading up much higher, I'm going to be in trouble. And so I've been patient watching this decline. I've been patient watching. Didn't chase on this breakout, kind of watch this consolidation. And so that's the plan. I'm CPER going bullish with a stop at 28. Let's take a look at the point and figure chart. Point and figure chart, we got a bullish trend line. That's the first thing I look at. I like that. Bullish trend line. The problem is it's way down here. It'd have to break 20 to stop me out based on a bullish trend line on a point and figure chart. But we did have a breakout on the upside, and now we've had a pullback. Based on this consolidation zone here in the breakout, we have a $49 price projection on CPER. Now, this is not a chart I construct. This is pure supply and demand. It's the least subjective type chart. So that's why I'm going with this. And I think right now the reward to risk is favorable. I don't feel like we're chasing. I think copper's lost some luster. Remember when everybody was following it with, uh, you know, NVIDIA, AI, everybody needs copper. I don't know. I don't hear that anymore. So I like that. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Tell your friends and family. Have a great evening. Tomorrow's Friday. Yay. And we'll see what tomorrow brings. Have a great evening.